Good afternoon. You're watching us here on Midcap Radar on CNBC-TV18. I'm Mangalam Malu. With me, Sonal Bhutra, looking extremely good for the market. So let's talk about all the top stories and then we talk about everything else. Stocks see some gains ahead of the RBI monetary policy meet decision on Thursday. Consumer durables and industrials lead gains while PSU banks and autos drag.
CNBC-TV18 learns that a cabinet meeting is likely later this week or next week, at which the recommendations of the Kirit Parikh Committee on gas sector reforms are likely to be taken up. City gas distribution stocks perk up ahead of that.
Bharat Dynamics under pressure after the company recorded a 12% decline in its revenue year-on-year basis. Company says delay in receipt of imported electronic items and critical explosive materials from the original equipment managers impacted revenue.
North America Class 8 truck orders decline over 15% month-on-month basis, down 10% YOY. For the month of March, stocks like Bharat Forge are under pressure today. Okay, those are the top headlines that we are tracking for you on Midcap Radar. As far as the markets are concerned, surging ahead, Nifty is at the day's high as we speak, up 137 points right now at 17,535. The Bank Nifty 2 is actually providing some support. So that index is up 0.5%. It is underperforming the benchmarks, but no one can really complain about that, right? It's only the mid-cap side of things which are languishing a bit. So it's down 50 points on the mid-cap index, but the advance decline ratio is strong, absolutely in favor of advances. 3 stocks on the advancing side for every 1 stock which is declining. So looking good, and of course, the big trigger for tomorrow will be the RBI Policy Committee outcome.
Yes, that will be the big trigger. And, a bunch of factors which are supporting the market as we speak. We saw some momentum for our indices earlier itself, and the street believed that maybe there could be some sort of resistance between that 17,500 and 17,550 zone, exactly where we are at right now. But the momentum strongly seems to favor the bulls. Why do I say that? Well, despite the underperformance of the Nifty Bank, the last half an hour belongs to the IT index. Pull up the Nifty IT index. That's moved to the high point of trade, outperforming with a gain of almost 1.3%. And at the same time, we have the mid-cap IT stocks doing extremely well as well. So Coforge, L&T Tech Services, or any of these mid-cap IT, LTI, Mindtree, for instance, for that matter, all of them have moved to the high point of trade. So looking good. The mid-cap index, while is underperforming, will be interesting to see the second half of trade on that index, mainly because it's also weekly options expiry for the mid-cap index. But talking about mid-caps itself, let's talk about mid-cap movers. We have Vivek with us as always to talk about all those mid-caps that are moving around in trade today. Vivek.
Well, thank you so much. Like you mentioned, it's a slight underperformance as far as, the headline benchmark mid-cap index is concerned. But, within the mid-cap space, quite a few stocks are outperforming in today's trading session and some good volume action too. First on our list is Max Ventures, stock up almost 13% in today's trading session. Now, Harsha Engineering, now today you saw a report from JM Financial, they've initiated coverage on the stock with a buy rating and the stock is up almost 16% in the session today. Nykaa, after a long period of underperformance, in fact, today perking up in the session, and Isaac Heavy Engineering too up today on good volumes. On the other hand, some of the stocks that are seeing very strong volume action compared to their 5-day to 10-day average. Unichem Labs, last hour of trade, this particular stock has perked up significantly on strong volumes. We'll wait for any news front on this particular name. Make Money Organics up for the second straight session on good volumes today. India Bulls Real Estate after a while, and Star Health too is perking up on strong volumes. On the other hand, some of the names that are underperforming within the auto space, Ashok Leyland is a significant underperformer, and 2 names, Global Health as well as Max Health, continue to underperform. We saw the news day first day where select portion of their hospital beds were required to be given to the weaker section, and on the back of that, some downgrades have come in as far as the EPS estimates are concerned.
Okay, all right. Thank you so much, Vivek, for joining us. And those are some stocks from the broader markets which are in focus today. It's a good time to get a technical check on the markets as well. Jay Thakkar, Head Alternate Research at Sharekhan, is joining us for just that. Good afternoon. Thank you so much for joining us. Well, there's strong momentum that we are seeing in our own markets and a lot of segments or stocks which are supporting that. What are you suggesting would the next move be on the Nifty? We'll see further upside here, or this is the level at which we'll see consolidation? Hi, Jay, can you hear me?
Yeah, now I can hear you, yeah. So see, as far as the markets are concerned, I would say that Nifty definitely has recovered quite smartly. Post provided a breakout above the levels of 17,200 on the upside, and we saw Nifty consolidating within this range of 16,800 to 17,200 in the March series, and on the last day of the financial year, we saw a breakout coming on the upside, and hence the target on the upside now comes to 17,600 on the Nifty, whereas on the Bank Nifty it comes to 41,500 to 42,000. That was the previous swing resistance as well as the upper end of the range. So we are bullish on both Nifty and the Bank Nifty. We have been consistently bullish since past 3 weeks now. The reversal level now on the Nifty positionally would be at 17,200, whereas on a Bank Nifty it would be 40,000. On the immediate basis, I would say that 17,400 on the Nifty would be a very crucial support. We don't see a close below those levels, and likewise 40,500 to 40,000 range for the Bank Nifty will act as a very crucial support. So there is still much more upside from here on Bank Nifty still pending, as we are targeting 42,000 out there. So the overall outlook for the indices both on the Nifty and Bank Nifty is positive. Hence I have a couple of buy recommendations. The first one is on Sudarshan Chemicals. The stock is trading around the levels of 407. It has provided a very nice breakout from downtrend line resistance from a triangular consolidation, as well as if you look at the momentum indicators both on the daily and the weekly charts, it has provided a buy crossover with a positive divergence. The second buy recommendation is on BSE. It's trading around the levels of 449. So the target on the upside on BSE comes to the levels of 475. That would be the initial target, and thereafter 505. One can place a stop loss at 435. This too has provided a very nice breakout from a downtrend line resistance with a positive or a bullish crossover in its momentum indicators. The target on Sudarshan Chemicals, which I forgot to mention, the targets on the upside comes to around 435 to 450, and a stop loss can be maintained at 395. Apart from these two mid-cap ideas, I've got a buy recommendation on L&T. It's just that it has provided a very nice breakout from a symmetrical triangular pattern. So from a large cap, you can focus on Larsen, whereas on a mid cap you can focus on BSE and Sudarshan Chemicals.
All right, we take your point. And mid-cap IT doing extremely well. L&T Tech Services now at the high point of trade. Coforge, Persistent Systems. In fact, these are gainers. We have almost 5 of the top 6 to 7 F&O gainers being in the mid-cap IT space itself. Take a short break. Come back on the other side. We'll get you excerpts from Ekta's conversation with Mankind Pharma's VC and MD Rajiv Juneja.
Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Market steady, but we have seen some fall from the highs, and it is led by Bank Nifty. So that one is up 155 points. But if we look at the chart of Bank Nifty, that is the one which has seen some selling from the top and is trying to recover from those levels as well. But let's move on, because we have Mankind Pharma on our radar. Of course, it's an unlisted company which is getting ready for its stock market debut and is currently awaiting regulator approvals for its IPO. Ekta Batra caught up with the management yesterday. But before that, Ekta, tell us more about the takeaways and about the company as well.
Thanks for that. Well, yes, it's one of the more keenly awaited IPOs within the entire pharmaceutical and healthcare space. Remember, they have recorded sales of around 7,000 odd crores with margins of around 25 to 26 odd %. So this is going to be a keenly awaited IPO. Just a couple of details. This particular company, Mankind Pharmaceuticals, started operations in 1995. Until now, all of the growth that they've seen is majority led by organic growth. Now, majority of sales, interestingly, are from the India market for this particular company. So it is a domestic focused business. They get 97% or thereabout sales from the Indian market. Now, they have a lot of brands which are top of mind for many consumers. For example, Manforce, which has around 30% share in the consumer healthcare space. Prega News, which is around 80% share in that category, as well as Unwanted 72, which is around 59% share. Now, all of these fall in the consumer healthcare category for Mankind Mankind, interestingly, that's only around 8 to 9% of their sales. Over 90% of their sales, in fact, comes from the traditional pharmaceutical business in the domestic market. In fact, talking about the traditional pharmaceutical business, they have around 33% of share within the chronic portfolio, or 33% of their sales coming in from the chronic drugs. Currently, 15 out of 100 prescriptions are Mankind. They have around 4.4% share in the Indian pharma market in terms of value. They have one of the largest, most diverse field forces in the country, with around 14,000 people, and they've seen growth of around 15% CAGR. Now, the company manages to price itself around 15 to 20% cheaper than the drugs which are available in the market. They have a low NLEM exposure compared to the average. It stands at around 13% and has around 23 manufacturing facilities in the country. Exports is very small, 3 to 4% of sales. They don't expect to scale it up too significantly as well, because they expect India to be the key driving force in terms of sales. They also do have 3 to 4 drugs in the innovation pipeline, which is something that the street would probably look at quite keenly. I did catch up with the management. Listen into what they have to say.
So the first 98% business of Mankind is coming from domestic sales. 33% comes out of that from chronic side. Out of all the business, total business, around 9% comes from the consumer side. And a lot of popular brands are there in consumer side: Manforce, Praga News, Unwanted, 72. These are all in their own category, #1 brands. We are known for giving highest quality products at the most affordable prices. That is what for Mankind is popular. Reach in India, we cover 4 lakh doctors. And dream of Mankind basically is somehow to become some kind of institution in future, to be the most admired pharmaceutical company in India from inside first.
Okay. 7,000 crores and 25% in terms of margins is what you've achieved in the span of 27 years. How did you get here being a homegrown pharmaceutical company? And is that the vision going forward as well, that India would be majority of your sales?
It's a dream come true for any buddy who is coming from a small town, lower middle class family. So in every organization, you find the personality and the thought process or dreams of promoters. So our dream was somehow to reach to a big level that we could really reach. And India would always be center of all the actions. We see there's a tremendous potential in India. On one side, we are called 27 years old company, but actual average age approximately would be 21 years. We have grown slowly and gradually, always been contrarian, never followed any kind of status quo, made our own way at different times. Different strategies were followed. Affordability has always been the forte, but disrupting the market at different times has always been the most important strategy of Mankind, that somehow can we give differentiated products, affordable products, most affordable products to the last man in the last row.
You identify yourself as a pharmaceutical or a consumer healthcare company, considering that consumer healthcare, which is top of mind in terms of Mankind and the perception that you have in the market, is only 9 to 10% of sales. So you're at this interesting cusp of being a pharmaceutical / consumer healthcare company. But what do you identify yourself to be, and what is the vision?
Mankind is a very unique kind of a company, having a mixture of things. On one side, we have grown bottom up. Smallest doctor, smallest area we have covered. On the second side, we have a lot of consumer products. That basically has given us edge and psychological edge, and as your perception that this is one company growing very, very fast. So it's a very unique kind of a company. We cannot compare Mankind with any company as a whole. It's a unique model, actually. Consumer, chronic, affordable, disruptor, in search of something which is very unique, which makes India proud, Mankindians very, very proud.
What do you think would probably be the biggest challenge in operating in the Indian market?
We think a lot, and generally whatever we think, we work on that, very, very proactive. So presently we are working on DMF grade API, which offers 99% plus kind of a purity. Our belief basically is whatever a American citizen gets, whatever a international patient gets, the same kind of a quality a Indian citizen should get at Indian prices. So we are working for that side.
Right, that's the management of Mankind Pharma ahead of the IPO. Some important commentary coming in from them. But take a short break, come back. We have a special segment, Midcap Spotlight, on the other side. Stay tuned.
Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Well, midcaps, they continue to languish in today's trading session. Of course, underperforming, sitting with cuts of around 70 points. However, the advance decline ratio, as I earlier mentioned, it is better and in favor of advances as well. This is a special segment, Midcap Spotlight. Manglam, you're focusing on Wadia Group stocks. What's happening there?
I am focusing on the Wadia Group stocks and one stock in particular, which is Bombay Burma. Why is that? Because if you just take a look at the way the Wadia Group stocks are moving today, Britannia absolutely flat. We have a big move coming in, a relatively big move coming in on Bombay Burma. And if you just take a look at Bombay Dyeing as well, that's the other stock which is doing well too. So there you have it, Britannia flat, Bombay Burma higher. Why is that? Because, well, yesterday Britannia announced that they will give 72 rupees per share as an interim dividend. The ex-date for that dividend is April 13th. Now, for Britannia shareholders, it's 1.6% dividend yield because, you know, the Britannia shares are around 4,300 odd rupees. You get 72 rupees as dividend. But for Bombay Burma, which is the holding company, they have 12.17 crore shares in Britannia, which is roughly 50.5% stake. So they get 877 crores as dividend. What does that mean? Well, the market cap of the company is close to 6,000 odd crores. 877 crores as dividend is a quick addition of almost 12 to 13% to their overall cash pile. But the stake in Britannia for the company is worth 53,000 crores. Is this new information? No, not at all. Bombay Burma, we know for the longest time, has been holding stake in Britannia for a much longer time. But, you know, what's new is that the discount is extremely wide right now. At current prices, the discount that it is trading at to Britannia's holding is 88%, the holding company discount. At peak, it has been around 67%. And I was just looking at an average over the last 5 years, it has been 80%. So the discount has widened, and they are going to get dividends. So for those who are playing for the discount to at least move to the average, if not peak, then they can keep an eye out on Bombay Burma.
Okay, Bombay Burma, the stock on our Midcap Spotlight segment today. Thank you, Manglam, for that. The other stock that we are going to be talking about is Bharat Dynamics. It is trading under pressure. They have given an update in terms of provisional revenues for FY23. Vivek, what do they say and what is the update here?
Well, that's right. So Bharat Dynamics, in line with most of the other defense companies, has gone ahead and given an FY23 provisional revenue, or you could call it the turnover, as far as what is it that they booked for the year gone by. So when it comes to Bharat Dynamics, it's been slightly disappointing, and even the company has gone ahead and explained the reasons why. But first, let's have a look at the headline numbers. Revenues for FY23, the provisional numbers have come in at close to 2,558 crores, which is actually a fall of 12.5%, a little over 12.5% on a year-on-year basis. Now, the company has gone ahead and listed a key set of reasons as to why exactly, despite having a burgeoning order book, why is it that the revenue booking has been lower. Number one, the company says that there has been a delay in receipt of imported electronic items and critical explosive equipment from the original equipment manufacturers that led to some delays. Also, there have been changes as far as the design is concerned in the production of the naval products that the company was supposed to deliver. Also, they're saying that there has been a delay in receipt of a medium-range surface-to-air missile that the company was producing. And this, again, there has been a delay from the OEMs here as well. So what the company is saying is that this particular shortfall that they have seen in FY23 is likely to be recovered in the current financial year. So while, FY23 ends on a slightly subdued note, they believe that they should be able to make up for it in FY24.
All right, Vivek, thanks a lot for that. So that's about Bharat Dynamics under pressure in today's trading session. Keep an eye out in the FMCG space. We're seeing good moves come by in both HUL as well as Asian Paints from the frontliners. HUL is actually at the high point of trade and one of the bigger gainers on the Nifty in the last 1 hour or so. Why is that? Well, because we've got good updates coming in from both GCPL as well as Marico. They're saying that sales have been good for them, but more importantly, margins have expanded even more for both Marico as well as GCPL. Does that play out for HUL or not as well is something that we'll be watching out for. Marico holding mildly in the green, GCPL slightly in the red, and actually recovered from the lows and moved mildly into the green. But the biggest mover right now is HUL, sitting with a gain of about 1.5%. With that, we wrap up on this edition of Midcap Radar from Sonal, me, the entire team. Thank you for watching. Your stocks when we return.